Money Moments on 4, sponsored by Gregory Ricks and Associates, the Total Wealth Authority.
In this morning's Money Moment, as predicted, the Fed made their second interest rate cut this year by 0.25%. The Fed cut half the size of its September reduction, lowering the federal funds rate, the interest rate banks charge each other for short-term loans. Now they lowered that to a range of 4.5 to 4.75%. Although inflation has since cooled and now hovers just above the Fed's goal of a 2% annual rate, prices remain high, while elevated borrowing costs have also hit people's wallets. Now, what does this mean with President-elect Trump now in office? Analysts with Capital Economics predict the Fed would drop its benchmark rate by 0.25 point at each of its next 3 meetings, with the rate bottoming out in May between 3.5% and 3.75%. Now, economists predict that Trump's proposed combination of tariffs, tax cuts, and increased federal spending and mass deportation of undocumented immigrants could increase inflation by as much as 1 percentage point. Now, if that occurs, the Fed would be hard-pressed to continue easing borrowing costs, and that could instead be forcing them to raise interest rates to counter those inflationary pressures. In the past, Trump previously criticized the Federal Reserve Chairman Jerome Powell's performance and actually asked him to resign. Well, Thursday, when asked by reporters after the Fed cut that rate and had the press conference I told you about, they asked whether the outcome of the election would affect federal policy. Powell bluntly said that he would not be stepping down. He also reminded everyone that it is against the law for a U.S. president to fire or demote the federal chair position. That's your Money Moment on this Friday.